This is a Renko chart, and this is how I want you to make money from trading Bitcoin in 2023. So the first thing that you'll see with this chart is that I'm not using normal candlesticks. The reason being is because when it comes to trading Bitcoin, using normal candlesticks doesn't work as well as Renko charts. Renko charts plot not per unit time like a candlestick, but by the amount of movement. You'll notice that every single Renko block is the same value. However, the amount of time to fill that block and make it is different. In 2023, you'll have noticed that we've near enough always been going up. You can see that from the beginning of January, we had this firm push towards middle of January. We had some reasonable consolidation for a few days, and again, we have been pushing up. If this trend continues for 2023, then trading with Renko charts is the most efficient way for you to be able to extract the trend and also the most opportunity from it. This is simply just because you stop looking at the consolidation because you're only seeing the amount of price movement. Now currently I'm on the 15-minute chart, but we're going to move up to a higher time frame just so you can see it does get a bit smoother still. You can see that this is the entire of January so far, just from this candle here. In fact, we'll drop down to the 1 hour because that's good enough. And you can see that we've had almost 20 days, yet we've had a fair few bars. To point for reference, the entire month previous is only a matter of maybe 15-20 bars, yet we've already had maybe 30 to 40 bars in 2023. Now, when it comes to TradingView Renko charts, you will note that they are ATR based. You can set them to a traditional, and that allows you to then use your alerts, whereas when they're set to ATR, you cannot use alerts. ATR length I've just set as 100 to remove some of the short-term volatility to help keep them more consistent. And I've set them to open, high, low, close as opposed to just close prices because it gives a more accurate chart reading. Now, on the chart, we have just a pivot point super trend, which I've got set up like this, just giving me a nice smooth result, but also chasing quite aggressively. You can see that this does jump significantly up and relatively quickly. I've also got a logistics map index and a pip hunter momentum extreme on the chart, just simply so that we can start being able to grab some of these trades. You'll note that in this scenario, the LMI was the first of the two off-chart indicators to catch up, as momentum does sometimes take a little bit of time to join in. You can see that, in fact, LMI was about 2 candles ahead of even the pivot point super trend. So by this point, you would have had a reasonable trade to take. I'm just going to mark it up. I'm often not so worried if momentum is not quite caught up, especially when it is on near enough moved its way from the 100 to the 0 line where it's ready to go green. You can very easily set your stop loss just below the magic fib in this case, and then set your trail stop either on the line, so as price has moved you can set your trail stop on the line and continue it on the line, or as price goes from one boundary to the next you can continually set to the previous line. So as price got to this line, you could set it to here, and then as price gets to this line you could set it to here and continue to stagger it forward. The more optimal way would by far be just following the trail stop line. That's exactly what it's there for, and it's going to get you out nice and quickly. You can see that this trade we would have entered right here and exited just over here around 3.5 to 1, but with minimal to zero drawdown. And again, we would have another trade just around here, which you can see momentum and LMI also agreeing. And I'm going to set our stop loss just to this one this time, and you can see that currently we would be running around 2.37 to 1, and I would assume our take profit's going to be somewhere around 4 to 1 up there. If I bring this onto the line just so you can see where it started at 4.3 to 1. And you can see that this is by far the most efficient way to trade Bitcoin. You would ignore this sell signal because when you're in a bullish market, only consider taking buys anyway. And especially as the year plays out, I imagine we'll be looking more towards the buying than selling. However, if in maybe 2 or 3 months you notice that price is still around the 15 to 20,000 range, then you can consider we are still in a bearish market, at which point we can look at taking both directions of trades. And especially if you notice some hard falling points. So if I scroll back through the chart, you'll note that around November you saw some hard falling. So if we get that sort of scenario to occur again, maybe somewhere over here, then we know that we're still in a bearish market and we can still take the sells. But for the immediate short term and into the next couple of months, I would only be considering looking at buying trades. It would also be a reasonable idea to consider the dollar cost averaging method, where as prices moving consistently over time, it might just be a case of trickling into a position over once a week, maybe once every other week, where it's considering adding part position now, part position 1 week's time, and another, and if price moves down during that time, you're able to then grab new lows where your average price of entry is better. But then also in the case of price continuing upwards, you're still grabbing some of that exposure, as well as in being able to enjoy some of the reward from it moving upwards further. So that's just a small update on a perfect way of trading BTC in 2023, or at least in the very beginning part of it. Thank you for watching, and I will see you all in the next video.